Hello again and welcome back for another edition of London Direct. We're going to talk Australia now. Australia's economy is having to battle some real headwinds. Housing prices which are threatening to get out of control, falling commodity prices and rising unemployment. I've been speaking about all things Australia with Angus Campbell from FxPro. So let's look at the Australian economy before we specifically get into the Aussie and the RBA. It strikes me that Australia's had this commodity boom, it's coming off now, but looking at the unemployment at 12-year high, wage growth at 18-year low, it seems that the Australian economy has been badly mismanaged.
Well, you would think so. There's definitely a kind of almost a two-tier economy. It's quite bizarre what's going on there because obviously we'll probably touch on this very shortly, but the housing market in Australia is doing particularly well, and that's at a time during very high unemployment. So it's like there's a sort of two-tier economy at the moment. Overall, of course, it is a sort of commodity-led economy. It's very, very reliant on Asia. In particular, China. Things there are slowing, and we are seeing that the Chinese have cut interest rates just this week. The economy is slowing. It's definitely growing probably, sub 7%. And there are real concerns over the credit issues there, the property bubble in China, and the knock-on effect that could have for the Antipodean economies, such as not just Australia, but New Zealand economy as well. So things are really quite rocky at the moment, and it comes as a bit of a surprise, to be honest, that the RBA didn't act to cut rates any further. Yes,
so let's look at that issue with the housing sector. I was reading that profits from retail companies outstripped those of mining companies in Q4 of last year. Isn't that just an indication that the Australian housing sector is overheating?
Well, this is the concern, of course, is that there's certainly been a sort of rebalancing, as it were, away from the mining sector, which is suffering quite considerably. You consider a few years ago just how much that was booming, and it's having to go through tremendous cost cutting to sort of bring down its base operational costs, things like that. That's having a huge knock-on effect. So what's going to take up the slack? Well, the consumer in Australia is going to have to take up some degree of slack. So that's going to be retail sales. Now, if house prices are booming, then house owners feel better, consumers feel better about their finances, they're going to go out and shop. So that is a bit of a worry, because how long will that last if unemployment remains high? Not necessarily all that long. So this is the kind of problem that the RBA is facing at the moment.
Yeah, 'cause it's not working, is it? Because you're right that in theory the consumer can pick up that slack, but as I said, unemployment 12-year high, wage growth 18-year low. There seems to be a disparity there, and that's why the Australian economy seems to be struggling.
Yeah, well, precisely. I mean, I think there's probably a degree of impetus from lower oil prices. We're feeling that and seeing that feed through into the UK in particular, certain elements of Europe as well, benefiting from those lower oil prices. That will help the Australian economy to some degree, but there's no question that that high unemployment rate is going to affect the wider economy, and the only thing really that seems to be sort of supporting it at the moment and even influencing the central bank's policy is the higher and probably one could argue unsustainable house prices.
Yeah, so let's move on to the RBA itself. You're right that it was quite the surprise that they didn't cut. Do you think that this is just a temporary case, that in the next meeting they're going to cut further?
I think it probably is temporary. The RBA has surprised the market a few times with not only their language but their actions as well. So everyone was expecting a rate cut. Of course, the Aussie has strengthened on that, not hugely, not significantly by any stretch. The market is penciling further rate cuts from the RBA. It meant that Aussie dollar got back above 78.00. It's around 78.35 at the moment, but the bias is to the downside, and particularly if you see further dollar strength in the US, then that's probably going to feed through to a weaker Aussie, and expectations for a rate cut probably in the early part of the summer and then maybe even late part summer as well. So we're likely to see the base rate below sub 2%. But beyond there, probably unlikely, depending on what happens with the housing market.
Yeah, so just to finish off, what's the outlook for the Australian currency? Because we are shifting slightly in terms of international central bank policy. The Fed's likely to raise this year BOE not far behind. So do you think that that's going to help the RBA in a way because they want a weaker Aussie dollar?
Yeah, of course they do. That means the outlook for the Aussie dollar isn't all that bright. I think that any strength will be limited, it will be temporary, and it brings us back to this Asia thing. The link there between Australia and Asia is huge. That Asian, bloc, China, Singapore, South Korea, Japan as well, they're all slowing. They're slowing quite significantly. That will have a knock-on effect for Australia, which means the outlook for the Aussie is quite weak.
Well, thank you to Angus for his insights into events in Australia. Stay tuned to Duke's Copy TV for more interviews, but for now, goodbye.